Good evening, everyone. My name is Paul Young. I'm just going to walk you through the trade analysis for Canada for the month of January 2016. So I'll give you an executive review. I'll talk about the implications. I'll actually talk about a bit of a summary, more of the trade deficits and surplus area. I'll focus some of the key sectors because that's critical to kind of understand where the economy is heading and where exports will potentially head over the next year or so. And I'll talk about government policies and different issues that will drive it. Like anything else, I'll give you the little disclaimer here. This is just one view of the trade data. It shouldn't be taken as the only source of information. It's up to individuals to kind of do a little bit more research on their own. Let's talk a bit about myself as the presenter. I'm a CPA CGA by trade. I've got 25 years experience in academia, industry, as well as financial solutions. So let's talk about the top level view. We had a small deficit in the month of January, which is about $655 million. Now, what you want to really take away from this is the key areas that are driving the economy right now that tie back to manufacturing are automotive, consumer goods, electronic goods, forestry products. These are critical sectors or part of the manufacturing sector. So what you're seeing there is you're seeing a little bit of the manufacturing sector come back to offset some issues in the commodity area where energy is still down at low ends of price, and you're seeing that some of that ability of the other sectors to pick up the slack were some of the reasons why the exports have grown, along with a strong U.S. economy, and that's what I want you to take out of this slide. What's the implications now? U.S. economy and the Canadian economy are driven by a couple major components. 2/3 of everything that's driven is consumer spending. So by seeing automotive, electronics, food, forestry goods doing well, that means you got a healthy consumer marketplace. Now, a lot of things can happen to impact that consumer marketplace, from taxation policies, other governmental intervention to stimulate the economy that you could see impact there. For right now, with the low dollar, that should help exports expand a bit more, as well as solidify some of the demand in the U.S. because 75% of all goods go south of the border. Let's talk about the trade surplus deficit. Canada's, since December, we've grown our surplus with the U.S., which is a good thing. So that tells us the U.S. economy is picking up. We've also closed the gap with China. So a lot of that has to do with where China's economy isn't growing as strong. So we're not likely importing a lot from them, but we're also likely not exporting as much. So basically, we're seeing a little bit that we've closed that, but you're seeing about a $500 million drop since January 2015. So you're seeing in this chart where we've got significant issues where we need to look at trade deals to expand our ability to import or export, in this case export goods into those markets to close that gap down. And it's a trade difference between imports and exports that actually impact the GDP, the net impact to GDP. Let's talk about the sectors itself, and you're seeing here that in January 2015 energy was about $7 billion on a monthly basis, and look at where it is now. We're about $1.5 billion off that, but some of that's to do with the price of oils basically come down to about 75% where it was last year, and that's significantly a big drop. So that's what you're seeing in that. So is some of the volumes too as well. But you're seeing the other sector where automotives is really going through a boom cycle right now, and it's projected to hit around 17.5 million units in the US. That benefits Ontario, so that's a good area. Aerospace too is an area too that you'll likely see some uptick as well, because the volume patterns of the airline replacement seems to be picking up there. But look at what's driving here. It's consumer spending in the US that's driving this. This is something that's not really discussed in terms of the fundamentals, and it's something that people need to understand as we move forward. What's going to impact? Well, there's a bunch of things in play here. CETA trade deal, which needs to be ratified, appears to be open again because they're looking at the whole investor protection area. Now, this is an area that people are a little confused about. Any sort of trade deal has a certain amount of clauses built in for protection, and it's supposed to be done that way so that investors have the ability to not be concerned about their company be able to expand into those markets without fear of retaliation or control or government intervention. It's the way to kind of protect people. So investor relations stuff is in every deal. So people talk about this from the union perspective, but they don't really understand that's part of a deal. Second thing is we're through a period of low Canadian dollar, which benefits our exports, but it also impacts our imports, so that we bring in food and other products from other countries, that makes them higher because of that dollar. That's something to bear in mind. Global growth from my previous presentation hasn't changed. It might have got dropped down or downgraded. It's another area to watch out for. The federal budget's due out in a month or so, and once that comes out, that will determine what the government's priorities will be for exports as well as the infrastructure investments. Will they put more key investment in terms of the ability to expand exports? That's going to be a critical discussion that needs to be had. I didn't talk about provincial policies. You could easily talk about that from cap and trade. You could talk about hydro rates. Those things could come into play and impact the cost competitive nature of business across the country, and it's something you need to bear in mind as well. This presentation was to kind of give you an overview of what's going on with trade, to kind of recognize the key aspects of what's going to drive going forward. Thank you.